Okay, so let's have a look at the sixth adjustment from McGuigan 2022 manufacturing account. So it says provide for a recent wage increase of 2% to be backdated to cover 3 months from the 1st of the 10th, 2021. So basically what we have in our trial balance for wages, let's find our direct wages. So direct factory wages are 148,000. So that 148,000 doesn't include an increase of 2%. So you can multiply that by 2%. That 2% is going to give it to us for the year, but that wage increase is not for a full year. The wage increase is only for 3 months. So then we're going to multiply that by 3/12. So 148,000 multiplied by the increase, which is 2%, and then multiplied by how long we had it for. So the back date is only for 3 months. You multiply by 3 and divide it by 12. So the increase is 740 euro. So it's 148,000. We're going to add on the wage increase of 740. So that's going to give us new direct factory wages of 148,740, and that's what goes into your manufacturing account. So all what we're doing is we're taking the figure we have in the question for direct wages, we're multiplying it by the increase of 2%, and then we're multiplying by how long we have to backdate it for. So we have to backdate it for 3 months. So 2% will represent 12 months. So then we're going to multiply 148,000 by 2%, multiply by 3/12. And that's your sixth adjustment for McGuigan Manufacturing Account 2022.